I want to look at the budget as it affects my clients in particular. There's a whole load of changes, and there was an hour-long speech and loads of detail behind it, but I want to really look at the changes as they affect my clients. And there aren't a huge number of changes, but they are significant. I do regular updates on tax and accounting issues, so if you want to be kept up to date, please subscribe to the channel, and if you press the like button, it helps me and the channel, so thank you for doing that. So when I look at the changes as they affect my clients, I think there are three main areas. There's the national insurance changes, there's the changes to holiday properties, and then there's some changes to indexation for inflation. So I want to look at those three separately. Let's look at the main event. National insurance has reduced by 2%, or it's going to reduce by 2% in the new tax year, and that follows on from a 2% reduction in January, or 1% for self-employed people. So if you add those together, it's 4% for employees, which I think is the biggest tax cut I've seen in my lifetime for employees, because national insurance is so similar to income tax. So it's a 4% reduction for employees and a 3% reduction for self-employed people, and the self-employed one has gone from 9 to 6%. That's very much the lowest that I've seen. For the avoidance of doubt, it's paid for by keeping all the allowances stuck. So inflation is forcing everybody through the allowances. We're paying more tax on more of our income. That's how it's being paid for. But the effect of it is that people who work for their money are paying a little bit less tax, and people who don't work for their money, so that's pensioners, landlords, all that sort of thing, they're paying a little bit more. And the implied intention is that they want to reduce it further. Now, this does have an impact on whether you want a limited company or not. In the last number of years, what has happened is dividend tax, when you get money out of a company, has increased. Company tax has increased. And then self-employed, which is paid by self-employed, limited liability partnerships and partnerships, that tax has now decreased quite considerably. It's quite a big difference. So it does affect whether you want to incorporate into a limited company or not. It definitely does affect that. But it is quite a complicated area, because it really depends now, and there's quite a lot of different things to think about when you think about whether to incorporate. It used to be easy. If you got to a certain size, you needed to incorporate. Now it's much more nuanced. It depends on what sort of car you have, what your income is, how many other companies you have, how many partners there are in your company or your partnership, whether you take all the money out of the company or partnership, what you do with pensions. So it's a whole load of things. And I think what I want to do on that is do a separate video and go through it in a little bit more detail, because I think our clients and people will need help to work out how they can save tax, whether to incorporate or not, and also within that, what tax they'll pay. So I'll do a separate video later on that. So the next thing is the holiday properties. So the holiday property regime is a regime where people with holiday properties, as opposed to normal rentals, have a beneficial scheme, and we're led to believe that the benefits will go. Now, I haven't seen the legislation. The legislation will come through. It might get changed. So we'll see what the final version is, because it is the sort of thing that they like to tinker with. So we'll see. So don't make any decisions based on draft suggestions. However, I will go through what the benefits of the system are, so you can be aware. Probably very important, if you've got debt, then if you've got a normal buy-to-let, you can't claim full tax relief on the interest, whereas you can on a holiday property. So that's an important one. Business rates, holiday properties pay business rates, and then they get small company business rates relief. Maybe they won't get business rates relief. I think that's quite likely. It doesn't seem sensible, or it doesn't seem fair really, that holiday properties don't pay rates and normal houses do. That seems a bit incongruous with the system to me. There are benefits about it can be treated as a trade, a holiday property, in which case you can make pension payments from the income. It can be on disposal. The assets can get entrepreneurs relief or business assets disposal relief, to give it a proper name. You can get rollover relief, so if you sell one and buy another, you don't pay the capital gains tax until you sell the final one. and there's inheritance tax relief because it's business property. You don't pay inheritance tax. So all of those benefits, we'll see just how many of those, and presumably all of them, is the intention, because they want to recover £300 million. So somebody's going to be paying that. So it's one of those where it affects a small number of people quite a lot. And then there's a whole capital allowance thing about what you can claim as capital allowances in a holiday property. So all of those things are now, I wouldn't say at risk, I'd say more than at risk, are in danger, in jeopardy. So we'll see exactly what the legislation is. But for the people who do have holiday properties, obviously it's a big thing. A relatively small number of people where it's a very important thing. So next is this inflation thing. So I thought with VAT, the VAT limit has been set when you have to register if you go over the turnover of 85,000. That's been set for years and years and years. And what they've done is inflation has washed over it, and loads of businesses have had to register for VAT that wouldn't normally have to do so. And it's really coming in, 85,000 is now coming in, so that a lot of tradesmen have to register. And I just assumed that they just wanted a much lower limit, which I definitely think they did, and therefore they're just letting inflation do their dirty work rather than actually reduce the limit. But it turns out we've had a change of policy, and they've increased the limit from 85,000 to 90,000, which is more than inflation as it currently stands, a little bit more, not way over. But if that's a sign of things to come, that is actually quite a big policy shift away from just letting inflation do its work. And the same thing for the child benefit. I'd assumed, since they included this about 10 years ago, and they never increased the allowances, I'd assumed that with child benefit, the £50,000 allowance, and then you got it tapered, it hadn't increased for 10 years. I'd assumed they were just going to get rid of it effectively for everybody, slowly by the erosion through inflation. But no, that has increased by much more inflation now. So you only start being taxed on your child benefit when you earn 60,000, and then more slowly between 60 and 80,000. So if you're on 75,000, you still keep a little bit of your child benefit. So that's actually quite a big change. And I think because generally in the past we kept people at £50,000, so they didn't pay higher rate tax. If you've got a husband and wife, £50,000 each, £100,000. £8,000 a month, you can live on. Most people would live on that, and therefore we didn't pay high rate tax, and we also didn't. We also kept the child benefit. Now the child benefit has allowances increase, and inflation means it's harder to keep people away from paying high rate tax. I think some people will choose to pay themselves £60,000 instead. So that is, I think, not insignificant change. So there we go. Those are the main changes for my clients as I see it. Big change to national insurance that I'll talk about again, changes to holiday properties, and changes to this inflation thing that had been stuck and is now being unstuck. If you'd like to be kept up to date on tax and accounting issues, please subscribe to the channel. If you press the like button, it helps me and the channel, so thank you for that.